Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. We've got a Fed Reserve meeting later today, but we're halfway through December already.
And I'm sure the Fed meeting's going to tell us the same thing we've heard for the last year. Interest rates are going to stay low. We're not going to mess with them. Isn't that what you anticipate?
Oh, yeah. They are likely also to say something a little more dovish. It's not actually clear what. Over the weekend, they typically will leak out to the Wall Street Journal and CNBC what they're planning on saying. And this weekend, those leaks weren't there. And then this morning, there are articles saying they're going to say this or say that or this. So I think they're still debating on exactly how they want to word it. But the meaning is going to be, we're keeping rates low for even longer than we said last time, and doing this and doing that. And it's going to be special for the markets.
Now, when it comes to things like mortgage rates, I hear they're more set by international bond markets than they are by the Fed. Is that true?
Well, yes, but the international bond rates are super low too, even lower than much of the United States. For instance, in Germany, you still have a negative yield on their government bonds, but the 10-year bond is more important than the short-term interest rate, which they talk about, we're changing or raising at these meetings. And there's now talk that they might eventually announce purchasing 10-year Treasury bonds to keep those rates low, because they've gone up a little bit in the past couple of weeks.
What's driving higher interest rates? The fact that negative rates don't really work?
Well, they're not really going up that much. The 10-year Treasury bond is still yielding less than 1%. I think it's simply that they fell so much this summer because of the reaction to the markets when everything crashed in March, and then the reaction to the Federal Reserve moves as a response to that. I just think the rates, it's still super crazy and low to me, but they just, got into a panic, I think, with some investors throwing money into bond funds in fear of the market continuing to melt down after the initial drop in March.
The Russell 2000 has finally woken up here at the end of the year. What's the story there?
Yeah, I think that's the big story right now. And in a certain sense, it was necessary to keep the stock market bullish in the United States, because up until then, most of the buying in the stock market was fueled by 5 stocks that heavily weight the S&P 500, the Apple, Amazon, Microsoft, Google, Netflix. These 5 technology stocks drive so much of the buying in the market. And when people were buying them, it helps to push up the S&P 500 because they weigh so much of it. So when the market first started to rally after the March drop, just about everything went up for 6 weeks. Even the stocks that fell the most went up tremendously. A lot of it was probably short covering, or you could say things fell too much in March. But whatever the case, after those 6 weeks, many things topped out and simply lost momentum. But those technology stocks continued to go higher, and they helped to drive the entire stock market up into Labor Day, and then they kind of lost momentum. So for a big bull market to keep going on in a country as big as the United States in the stock market, you do need to see an occasional rotation. You just can't have 5 stocks go up for 10 years. So right after the election and the news of the Pfizer vaccine results, we then saw a tremendous shift into the Russell 2000 and also many sectors and stocks that had been underperforming the S&P 500 and its big cap tech stocks since about June. Airlines, for example, took off. Casinos went up. Consumer staple stocks, restaurants, all these sort of things that were thought to be the worst places to invest because of the pandemic suddenly became places to buy in anticipation that the virus will fade away. Now, that buying is also starting to spread into oil and energy stocks too, as we come into the end of the year. And I think all sectors are likely to remain strong, probably going into next spring or summer.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Mike Swanson. Mike, some people would say this would be a very risky time to launch an IPO, yet a number of companies are doing it, some successfully, some not. What's your opinion on this?
Well, last week we saw the DoorDash IPO. I mean, this year we've seen Airbnb, several, headline companies. But last week was DoorDash, and it's absolutely amazing because the stock opened up close to 190. It's trading now at 155. But even with that little pullback from the opening, it's trading with a market cap of $60 billion. Well, it only makes a profit of $23 million. So it's trading at $60 billion and only makes $23 million. That's an insane valuation. It's basically trading at a PE over 250. In comparison, General Motors has a market cap of $59 billion, the same as DoorDash, and it made $10 billion in profit in 2019, and is still paying a 3.65% dividend. So I think the DoorDash thing is a sign that there is wild excesses in the stock market. It makes absolutely no sense to buy that at that valuation. We could find other stocks and say similar things about them, but the last time I've seen a mania like that with IPOs, I got to say, was back in 1999 and early 2000. That doesn't mean the stock market's going to peak out immediately, but it does say that, look, these valuations are extremely high, and that's something you've got to be aware of when you put money into the U.S. stock market. And that's one reason, though, I think that those sectors we were speaking about before that now are rallying, the Russell 2000, energy stocks, that they're getting a bid because some of them, they're certainly cheap in comparison to the S&P 500. In General Motors even, though I think it's a better buy than DoorDash, it still has a PE of 18. Not insane. Historically, the S&P 500 will trade a PE around 15, but it's still not cheap, but it's relatively cheap compared to much of everything else. But some sectors still are cheap, and I would put the energy stocks on that list. Exxon is paying around an 8% dividend, for example. So there's value out there in the market, but DoorDash I think is a big warning sign.
We'll have more with Mike Swanson right after this.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, on December 21st, Tesla will join the S&P 500 list of stocks. Is that going to totally distort the S&P?
I don't think it'll do that. The reason why is Tesla has a market cap of roughly less than 600 billion. It's like 550 billion. And that's not going to put it in the top 5, as far as heavily weighting the S&P 500. It'll be in the top 20, not the top 5 though. I mean, it'll have an impact, but not as much of an impact as those top 5 do. However, I'm very wary of Tesla because it's also a company, the 500 billion is crazy, for it when General Motors has a market cap of 59 billion. It's valued more than all the other car companies combined. So from a long-term investment standpoint, it doesn't make much sense. I know it's a favorite stock, for so many people. It's still on the top 10 list of the most bought stocks on Robinhood. But I think of it as a DoorDash, frankly. It's a stock that makes sense for people to buy when they see the stock market go up, and they want to buy something that sounds like it's got new technology with it, technology that's a sign of the times and gets in the media a whole lot. So that attracts people into buying it, and but if you think about valuations and earnings and what you're paying, then it doesn't make any sense. Now, people might say, well, that's, being a downer on it, but and I'd rather buy things that I believe in, and are going to give me a good dividend, believe in I believe it's a good price to pay, or else I have a hard time holding it. And with Tesla going into the S&P 500, that also becomes a situation where there's going to be and are so many hedge funds, computer programs, and so forth that are going to buy ahead of that because they know once it goes in there, there's going to be forced buying by ETFs and mutual funds and people that must match that benchmark. So they're buying ahead of the forced buying, and then they can sell. So Tesla is something that might actually sell off after it's put in there. That's typically what happens in such situations.
I know you like to take a look at what the Robinhooders are doing and how realistic their expectations are. What are the Robbies doing?
Well, when I look at the top 100 list, Apple is number 1 and Tesla is number 2, second most owned stock. And then you got American Airlines, Pfizer's on there. And that's an interesting one to comment on because Pfizer is now in the top 10 and it wasn't on there at all. I don't know if it was in the top 100, but it would have been certainly not in the top 10 until just a few weeks ago. So this shows how the people do chase headlines and news, but there hasn't been a tremendous amount of movement in this list. For example, Norwegian Cruise Line is in the top 20, but it got on there after everything crashed in March, and cruise lines were in the news. So there's some marijuana stocks on the list, but there's still not a single gold stock, a silver stock, or metals ETF in the top 100 list. And that tells me that even with the rally we've had this year in gold and the GDX, ETF, and so forth, it still has not attracted the individual investor in the United States by any stretch of the imagination, even though there has been, or was at least, tremendous money flows into gold and the gold metals ETFs up until August, but that kind of stopped over the past couple months as gold has been consolidating and currently is trading in a range of roughly 1750 as support and 1880 as resistance. Now, seasonally, gold tends to have the best months of the year in December and January, with the rally actually starting in mid-December. So I think the time is lining up for gold to break out of this consolidation. To do it, it needs to get through 1880, close about above that level, and it could do it by the end of this week. And silver also has a similar story to it, where it's consolidating with resistance at 25 and support basically 23. So if we can break that 25 level, we can break out on silver. And some of the mining stocks are jumping and sort of anticipating this. For example, Hecla Mining, which is a big cap silver stock that I do own, it's up 5% today, already broken out yesterday. And one positive about mining stocks, I mean, I know I see these predictions that gold's supposed to crash because things are going to get better with the economy that people say, or because Bitcoin has gone up. But the mining stocks have not crashed. And when gold is bearish, they tend to fall apart completely. And they're just not doing that. They're firming up against the metal. And also the small cap mining stocks have held up fairly well during this entire period since August, and some are still even making new highs recently. So I think the sector looks good. It's just a question of when is gold going to go through that 1880, and when is gold going to close above 25. So that's right now, you know, if I kind of sum up my thinking, what you asked me about the Russell 2000 to start, it's bullish. Lots of sectors that are lagging the market are going up. They're likely to continue to do that through the end of this year and at least the first couple months of 2021. So that is already in place. And to me, the big thing I'm then watching for is when is gold going to break this 1880, because that will trigger a big rally that, frankly, not many people on Robinhood are paying any attention to at all.
Now, they are paying attention to Bitcoin. It peaked at around 20,000 around my birthday 3 years ago. Well, it's my birthday now. Is this again going to be the peak for Bitcoin for a while?
I don't know. As we're speaking, I mean, Bitcoin is really kind of a crazy thing because last week it had one of these flash crashes and fell like 20% in a single day. And now as we're speaking, I think it's at a new high. It's trading above 20,000, 20,754. Who knows where it'll be, tomorrow, cause it's so volatile. But there's two things about it. One is, it is not a safe haven. You know, these people that are proponents of investing in Bitcoin will talk as if it is gold, that they'll even say that one day the stock market will crash and the dollar will go down and Bitcoin will just soar and take off. Well, every time the stock market has pulled back, Bitcoin has crashed. In March, when the S&P 500 pulled 33%, Bitcoin fell 3 times as bad. And it did the same thing in 2018. In the fall that year, the stock market fell 20% and Bitcoin fell over 50. So when the stock market pulls back, Bitcoin does not go up, it crashes. And if you analyze the relationships between various markets and how they trade with or against each other, historically gold trades against the U.S. dollar. When the U.S. dollar goes down, gold tends to go up. But Bitcoin, if you analyze that, Bitcoin really has no relationship at all with the U.S. dollar. It's completely random. And what it's most tied to is the NASDAQ. So to me, it's simply a ramped up NASDAQ. You know, instead of buying a triple NASDAQ ETF, you buy Bitcoin if you want to really speculate. And then when the NASDAQ pulls back, whenever it does have another correction, look for Bitcoin to crash again. So that's my real thoughts of what it is. It's just an instrument of heightened speculation, sort of like DoorDash in my mind. But the second thing about Bitcoin is 95% of all the Bitcoins are owned by 2% of the Bitcoin owners. So it's still a completely controlled market by a couple insiders, and it's not really regulated like stocks are. It isn't regulated as stocks are. So these people can manipulate it and do things that if you try to do with stocks, you would get in big trouble. For example, it's illegal if I was to take $1 million, let's say, in a brokerage account and buy a stock that does 100,000 trading volume a day, and say I bought 10,000 shares and then got another account and sold it to myself and then bought back to the other account and kept trading among my 2 accounts to walk the stock up, you know, at consecutively higher price ladders. You know, if I bought 10 and then sold to myself at 10.50 and bought to the other account, you know, at 11, walking the price up. Well, it's not illegal for these Bitcoin people to do that, and I fear things like that are happening in that Bitcoin market, and that could be why it crashes from time to time. And also, the fact that you can now short Bitcoin on the futures exchange makes it even more prone for these 2% Bitcoin market controllers, the whales, so to speak, to manipulate the market too, because they can also use short selling Bitcoin through the futures market as an instrument of manipulation. So I personally have no interest in getting involved in Bitcoin or cryptocurrencies.
And then, of course, you have governments like China banning cryptocurrencies because they claim they take too much energy out of their factories and homes, and they need the electricity because they're not generating a surplus. And plus, governments just like to run and control everything anyway.
Yeah, I mean, and that's an ultimate threat of Bitcoin, is that if it really did get to be as widely used as people believe, or some believe, there's nothing to stop, not just China, but every government from banning it or creating their own cryptocurrency that's tied to the dollar or their own national currencies or whatever. So it fascinates people, though, because you can dream about it, what it could become, and you can watch the price gyrate quite rapidly, almost every day.
I don't know if you get this in the United States, but in Canada, we're swamped with robocalls telling us that our social insurance number's been compromised, or we've done something wrong with the tax agencies, and the government is demanding a fine to be paid in Bitcoin. Governments don't take Bitcoin, and some of the local police departments are now posting that notice on Bitcoin machines, saying, don't fall for these scams. Is Bitcoin associated with criminal activity?
Oh, for sure. I mean, I've never gotten that call, and I haven't heard of anyone getting it in the United States, but I've gotten emails that are pretty crazy. They'll make a claim that I got this email once that said, "We've watched you on your webcam or something, and you were naked, and if you don't give us the Bitcoins, we're going to reveal these photos and something." And well, I wasn't doing any of these things that they claimed, so I knew it was a lie. But what they're doing is emailing that to thousands of people and finding someone that gets scared and, pays them. So
I don't know. I would say you pay me if you got naked pictures. Mike, all the best of the season.
You too.
My guest has been Mike Swanson, editor of wallstreetwindow.com. If you have any questions for Mike, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.